I'm Dylan Marma, and you're listening to Operators and Allocators, a podcast dedicated to exploring how to make smart investment decisions and execute well in real estate and private equity. We'll be interviewing top-notch sponsors from various asset classes to understand how they think and the frameworks that they put in place with the goal of achieving above-average risk-adjusted returns. Welcome back to another episode of Operators and Allocators. I'm your host, Dylan Marma, and today I am joined by someone who's became a good friend over the last few years and someone that I've learned a whole lot from. This gentleman had started off his real estate career in 2013 as an in-house leasing agent for a Nashville development firm. He quickly rose through the ranks, and in 2018, he launched a best-selling book, Open for Business, The Insider's Guide to Leasing Commercial Real Estate, and then went on to found his commercial real estate brokerage and went on shortly after that to found a property management company. Since 2019, he's been doing extremely well. He's been raising capital for value-add investments and development opportunities through his investment company, Hamilton, and he still remains vertically integrated, managing his own investments. So he's someone that I found makes juggling many different things look easy. He's overall just a great person, someone that definitely is always happy to share and give back and help people out with what he knows. Matter of fact, he's taken to YouTube recently and quickly became one of the biggest YouTube stars on commercial real estate. So let's welcome none other than Tyler Cauble. How's it going?
Dylan, very kind intro, man. Really appreciate that. I'm excited to be on your show with you. It's gonna be fun.
Of course. Happy to have you here, and it's great to have the chance to catch up. It's been a year now almost since I left Tennessee, so it's good to see you back.
I was going to say, you've had a wild ride over the last year. Things have changed quite a bit.
Yeah, it's been busy. So let's start off and just share with the audience, how did you get your start?
Yeah, so I actually, the summer that I graduated from high school, got into sales and learned that I was very just skilled at that, I guess you could say. Made $30,000 that summer, which the only reason I say that is because that was a lot of money. It's still a lot of money now. That was a lot of money then.
That's a big confidence booster.
Yeah, it's a big confidence booster right off the bat. So I get to college and I'm sitting in class. I'm like, man, what am I doing here? I could be making, in 3 months I made 30 grand. Over 12 months, it's $120,000 a year. What am I doing in class? So I actually dropped out after my freshman year of college, moved back to Nashville, and started working as a project manager for my grandfather's construction company. I'd done that every summer since I was 12. Thought that I was just going to take that over, grow it. But then a boutique developer that I had actually sold to that summer I graduated from high school found out that I was back in town and wanted me to come work for him. So he paid for me to get my real estate license, gave me a shopping center, an office building, and some industrial product to go lease. And we were off to the races. So kind of cut my teeth in that. Since it was a boutique development firm, every week I was sitting in on the development meetings, which most commercial real estate brokers don't get that opportunity. So I learned how to put deals together and develop. So when I was 24, I put together my first development deal, which was a 42 townhome project in Bellevue. And like you said, shortly thereafter, launched my book, started my own firm, and we've been off to the races ever since.
Quite a story. And matter of fact, I noticed some similarities between our stories. If I think back to myself too, as when I was young and 20 years old, I left school because I had better income opportunity in a sales role, and eventually quickly transitioned into real estate and grew from there on out, which is really cool to see. And it takes a lot of initiative, especially at that age, to really stay focused, right? Because that's usually not an age where people are ready to lay it on like that and go all out with, I'm sure, the amount of hustle that you put into what you were doing at that point in time. So before we dive more into your first development deal, I just want to hear from you when it comes to you getting your start and going that route of kind of going against the grain. I'm sure you had pushback from family and those around you to go and finish school. And you said, hey, the numbers just don't make sense here. Things just don't line up for where I am, where I want to be, what my opportunity looks like. So what is your take on that? Do you think that is a route that you recommend for other people, or are you still a big proponent for the conventional education route?
Yeah, I mean, look, I think that there are more people than probably take advantage of it that could just drop out of college and don't need it, but the majority of people need it. I mean, they just do, right? I mean, a lot of people don't have strong work ethic. They can't come up with good ideas. And so, look, the harsh reality is a lot of people need college. There are plenty of personalities though that don't, right? If you're a self-starter, if you know how to communicate with people, you don't have to go through that process. I mean, honestly, it's fairly archaic, unless you're trying to become a doctor or an attorney or something with some sort of specialized knowledge. I mean, you can't tell me that you're going to learn more about marketing in university than you will from working for a marketing company for 4 years. There's no way, right? So, I got a leg up on all of my colleagues because I had a 3-year advantage over them. I think that the other thing to take into account too is that it's so expensive. And you think about starting behind in life with all of this debt, it's crazy to me to go through that process, to get yourself in debt, $30,000-$40,000 a year, only to get a $50,000 a year job coming out of college. Like, that's just wild to me. So, yeah, I think the other thing too, look, you're the best horse to bet on, right?
Mhm.
I've always felt that way about myself, that like I am the best person to make a bet on. So, I've just always had the belief in myself to be able to go out and do it.
Yeah.
That's kind of what it comes down to.
Yeah, I think that's very well said, and I share a very similar viewpoint. I think that most people should go through school, and generally, if I'm asked, should I do it, should I finish, I generally say yes, you should, because if you don't need me to tell you that you shouldn't, right? If you know that you're ready to put the work in and go and carve your own path, which I think generally can be harder, but it can be advantageous, like you said, give you a little bit of a head start if you're really committed, then you don't need someone else. You don't need the external validation to do so. You're going to have that conviction to say, I'm going to bet on myself. I'm going to do it because I know I'm going to be able to push through. But generally, if given the advice, my advice is usually, yes, you should get the conventional education. I'm a huge proponent for having a general base understanding of, business, finance, accounting, especially if you're getting into commercial real estate. But I think that, for those that are very ambitious and just, they're going to, you generally are going to know it, at that point, if it's for you or not.
That's
So,
absolutely right.
yep. So that's great. Always good to touch on that, because I think a lot of people share similar sentiments in today's world. So shifting gears into your first development deal. So you had been out leasing a bunch of commercial real estate, I'm sure getting a feel for all different types of projects. How did that 42 unit townhome project come across your desk, and what gave you the courage to take action and go for it? How do you pull it together?
Yeah, so it was in a neighborhood that we were developing a lot of townhomes in. So the company that I was working for had a lot of knowledge of developing in that area. They knew what the numbers were for sales, et cetera, et cetera. So when I found the site, it was pretty much a shoe-in. Like, it was right in our wheelhouse. It was zoned. It was already zoned, so we didn't have to go through entitlements. It was 57 units. We ended up being able to only fit 42 on it. Um, I basically went out, found it, had the conversation with the principal of the company that we were working for, put the deal together, and then I ran as the project lead on it. So, didn't take a salary on the development side. I was a partner. So worked on that for about 2 years, and literally took it through everything. So fortunately, I didn't have any money. Right, I was 24, so I didn't have to put any money into it, but I got all of the experience of being a partner and running through a project. And then also got treated like a partner. So it was a phenomenal way to learn, because people romanticize real estate development, and they think, oh, the way to make money in real estate is by getting into development. And they're like, well, I'm just going to go buy some land and build something, develop something. Well, you can't. You can do that if you want. I think that's a great way to lose a lot of money. It's a very complex process. That, I mean, everything from, ensuring that the site is actually entitled for the amount of units that you think it is entitled for, all the way to where are you going to put the mailboxes on site, right? Like, there are so many little details that you'd be amazed at how many meetings we had to have over where we're going to put the mailbox for this site, because it was so tight. We had engineered it so closely together, working with the easements and trying to fit as many units as possible, but still having parking, all that kind of stuff. That at the end of the day, you're like, yeah, okay, we've got to put the mailboxes somewhere. Where are we going to put those? So it's all the little details. I mean, developers are the conductors of the orchestra. You don't need to know how to play first violin or how to play the flute or how to play the drums, but you have to understand how everything works together, and you have to understand it well enough so that you can conduct them. So that's what development is really at the end of the day.
Yeah, very well said. And I think that when people see the returns on development, they take that for granted. That's so something I often refer to is that the spreadsheet doesn't tell you the amount of brain damage that can go into doing this deal, right? So if you compare it apples to apples, you see, wow, the development's got a 30% return, whereas this value add has 20%. Yes, but think about how much extra time is going on behind the scenes to be able to achieve that return before you go ahead and make that decision, as a deal sponsor. Plus, like you said, there's a lot of just knowledge and, things that you really need to have experience in your team to be able to navigate through early on.
Oh yeah, there's so much work that gets done on the front end before you even break ground. I mean, 6 to 12 months sometimes. So it's a lot.
Completely. Now you've done a fair amount. You've done a wide variety of projects. You've taken a strategy where your market extremely well. I think a lot of your deals, if not all of them, have been in Nashville, right? So your market extremely well, but you're open to playing in that sandbox by going after. So you've done some multifamily, some retail, some developments, some value add acquisitions, and so on. So maybe if you wanted to speak to your overall philosophy when it comes to at what stage you're ready to go after a different, type of deal, whether it be a value add investment or different asset type or something like that. And to share with us a bit on what your experience has been as far as what different deal types have you explored this far.
Yeah, I mean, we're definitely boutique, which means that we're opportunists, right? We will do anything as long as we think it'll make money. Number one, but two, we have to be able to tell a story. We adhere to the ESG ethos, which is environmental, social, and governance. We like to make sure that there's some sort of positive environmental impact, positive social impact. And then, governance has to do with how the company is run and how everybody, so we're always aiming on every single one of our projects to check that box. That's a non-starter for us. To us, that means how do we make it walkable? How do we make sure that we have a diverse base of tenants? How do we make sure that we're utilizing the best materials possible whenever we're doing our projects? And what kind of community impact can we have? Because I'm not interested in just going out and building an office building. Like, to me, is there money in that? Absolutely. Am I going to go out there and build the next Dollar General? No, it's not interesting to me. There's no community impact in that. We have to have some sort of cool story that we can tell, which is why I really enjoy working primarily in East Nashville, because we have such a profound impact on this neighborhood, and we're helping keep it small business friendly and helping keep it local and keeping it cool, right? Because if you come out and you just start developing these corporate anchored tenant projects, that's how these neighborhoods start to lose their flair. And there's a lot of areas of Nashville that have lost that because of the last 10 years in this town. Honestly, the part of town that I grew up in, Green Hills, there's no soul left in Green Hills at all. So that's very important. So we've got everything going on from I bought a car wash back in December that we're converting. It's 6 bays. We're converting it into 5 micro restaurants and a bar. The 5 restaurants, this was not an initiative that we set out to achieve. But the 5 restaurants are all women or people of color owned, which is really cool to me. I mean, that just says once you create an opportunity, you'd be amazed at who's going to be out there wanting to take advantage of that.
That's great.
All the way to we've got a $60 million development going on in East Nashville. That's 220 apartment units, an 80 key hotel, and 24,000 square feet of commercial. And what we're really focusing on there with the commercial is that the commercial will be the amenity. So we're looking at the apartment complex. We're like, should we do a gym? Hell no. We're not going to do a gym. Why don't we just go get a really cool yoga studio and a really cool CrossFit gym? And we'll put that right next to 8 or 12 restaurants and bars, so that the reason people want to rent here is because it has the most amazing pool in Nashville. and you can walk downstairs to bars, restaurants, gym, whatever amenity you could ever want. So, that's kind of the types of projects that we're working on.
That's great. Yeah, I love that. Like you said, philosophy of being an opportunist and knowing your market. Being the reason you're able to get as creative as you are is because you know your market extremely well, and you're there all the time. You've invested there numerous times, so you have the ability to see things that others that are maybe outside of the market don't see. Right. So I think that's very important for people to know and understand. So let's just talk about how your criteria has changed since you got started. When you got started, what were you initially looking for, and what are you mainly seeking in today's market?
And when I first got started, I was looking for anything that would make money and get me started. Just some sort of opportunity to get out there and syndicate my first deals. We actually always kind of had this. The first syndication I did was focused on micro units, and that has kind of carried over into all of the projects that we've done since, because I very much believe in micro units, whether that's in multifamily or commercial. Retail, it does really well. Office, it does really well. Restaurants, it does really well. Apartments, it does really well. So why not continue to do that? There's nobody that's really focused on that style of development. So that was kind of where it started off, was, hey, let's just do some micro office units. And now it's grown up into, all right, we'll do, these micro restaurants. We'll do some micro commercial space on this campus style development. I'm looking at another project in East Nashville right now that we've got under contract that will be doing more micro restaurants and a bar. And we're, doing a project out in Chattanooga. It'll have 35. I bought a 9-story office tower out there. We're converting it into 6 floors of micro apartment units, 2 floors of micro office units. And then the ground floor will be a retail and cafe with some maker creator space, like 200, 300 square feet, but they're like little showrooms for a hat maker or a suit maker or whatever. So we're kind of focused, I guess, just holistically across our portfolio on small business.
Really neat. I think that is such a cool niche that you're involved in, and sort of it's neat to see how the first project you worked on sort of evolved into some of these massive projects that you're working on today. So what do you see as the biggest risks when it comes to investing in the deals that you're investing in, and possibly development as a whole, or value add as a whole?
Yeah, I mean, the good thing is we do everything we can, obviously, to mitigate our risk, but you're doing commercial real estate, right? So inherently, any and every investment is risky. That's the whole reason that they return capital like they do, right? I mean, if there was zero risk in a real estate investment, there would also be zero return, or it'd be 1% or whatever it is. It just wouldn't be a lot, right? So at the end of the day, it comes down to the team and how hard everybody's willing to work and make sure that we are correct in all of our assumptions. If we are incorrect, how are we fixing that? What are we doing? How do we right the ship? So far, we haven't had any unsuccessful investments, which is, obviously a point of pride for me, but it's because we look very thoroughly through every aspect of our deal. And if we miss anything, I'm busting my ass. My team is busting their asses to make sure that it doesn't impact our investors. So, obviously very happy about that. Mm-hmm. I think that's really, at the end of the day, that's what it comes down to. You've just got to make sure that you're taking everything into account. And look, as a deal sponsor, as an investor, there's going to be stuff that pops up that you could never, ever account for. And all that we are as deal sponsors or investors is problem solvers. You're going to be really good at real estate investing if you can solve problems. If you cannot solve problems and you fold every time anything pops up unexpectedly, you are not going to do very well. So that's it. It's just how you handle the ebbs and flows.
Yep, that makes a ton of sense. And that's why it always comes down to, I think, when you're LP on a deal, the betting on the jockey, not the horse, because it's really, how proactive how conservative are they on the front end, right, with their initial estimates? Then how proactive are they during the deal as things are going wrong? And if things take a turn, what is their moral compass, and how are they going to treat their investors if something does go sideways, right? So I think that makes a lot of sense.
Yeah, I mean, a mediocre team can take an outstanding deal and it'll fail. Mm-hmm. An outstanding team can take a mediocre deal and crush it. So in my opinion, it comes down to the team. 99%, 1% is the deal.
Mm-hmm. So just thinking about the micro apartments and micro office space, and I think that is clearly a trend. I know we have a office within a co-working space here in Tampa that's done really well for us so far. Just we really enjoy the setup, and I think a lot of major MSAs are seeing that trending in office space, especially after COVID, as well as on the apartment side of things. One conversation I had recently with a friend, we were talking about the new metric seems to be how Instagrammable is the place, right? And that's what I think back to when I'm thinking about some of the projects that you're working on. It seems that they're now valuing finishes over footage, right? It's all about the finishes and how quality does it look, not as much how much space do you have. So what is your view on that trend?
I think it's absolutely right. I think you've got to be very authentic about it, though. One thing that a lot of developers get wrong is that they think that they're going to be able to just hop on a trend, right? You see, okay, the angel wings in the Gulch in Nashville. Everybody's probably seen Instagram photos of that. Oh, well, that's doing really well in the Gulch. Let's just paint some wings on the side of our building. That'll do well here. No, it looks ridiculous, and nobody likes it because it's inauthentic and you're not even really trying. So, to me, you can't just paint an Instagram wall and hope that people take photos in front of it. You've got to create, as my design manager, Jordan Fife, says, he's like, you've got to create all these little moments, right, throughout the property. And so that's exactly what we do. Everything in our property is Instagrammable, right? Like every single aspect of it. We're closing on a hotel tomorrow, and we're going to convert it. It's currently just a roadside motel. We're going to turn it into this 52-key boutique hotel that has a very authentic Nashville feel. Well, everything from the aero bar next to the pool to the petanque court to, we're going to have a rosé cart that will come to your room, right? We'll have a world-class restaurant. We're going to have horse trough soaking tubs outside that you can, like basically above ground hot tubs that are shaped like horse troughs that you can hang out in with your friends. So you think about all of these, like, we're not going to go paint "That's So Nashville" on a wall and hope that people take photos in front of it. We want people to just organically take photos on our site and tag it in it, because that's the lifestyle that you want to create. So I think Instagram, and however you're going to get people to share how unique it is, that is the best marketing you could ever achieve for your project. If somebody's going to post a picture and share it with all their friends, like, look at this amazing experience I had, that's the best marketing you could ever get.
Yeah, that's great. And I definitely think it is a good message that it's more of an art than it is a science. You can't just try to just blatantly copy what someone else is doing and not really put the thought and make sure it has the true sentiment that you're looking for it to have in place. So it sounds like you and your team put a lot of thought into the art component of things and pay a lot of close attention to detail there.
Right.
Now, tell us about your operations with so many different project types going on. What does your internal team look like at a corporate level and at a property level with the management?
Yeah, so we've got 13 employees across the 3 different companies now. And, that's the development, the brokerage, and the property management. We're very heavily vertically integrated. So it's at times it seems like we're the same company, but they are 3 separate companies. We've got everything from property managers to project managers. I've got an operations manager who helps oversee all 3 companies. We've got in-house marketing team. We've got brokers. Everything that we can do to just help keep everything in-house. I'm very pro vertical integration. I think that for us, that works really well. For some people, it doesn't, right? It's kind of like going back to the discussion we had with college. Vertical integration makes a lot of sense for the company and the empire that I want to build, but also we'll never be the #1 investment sales brokerage in Tennessee. We just won't, right? Because I'm not focused on that. If I wanted to go be focused just on the brokerage, we could probably hit that. But the brokerage is really more so to serve everything else that we've got going on with the development company. So, you're going to be taking your eye off the ball a little bit from one company, but you've got this ecosystem now. And I really do enjoy it because the Cauble group will lease something up that, hands off the management to Parasol. And then, the project management side of our development company can come in and help build stuff out. So it all ends up actually, we make 3 to 7 different streams of income off of one project instead of just one, which I always enjoy.
Yeah, I'm a huge proponent for the vertical model as well. It's something that we try to practice in our day to day as well here with TRG. And I think that, like you said, it's definitely not the way to scale the fastest. If you wanted to scale fast, then you can use third party by all means. You have to grow slower. You have to pace yourself. You have to make sure one branch of the company catches up with the other branch of the company if you're managing acquisitions and then property management. And I'm sure the brokerage is not something we're doing at this moment, but I'm sure that's similar in that sense, making sure that they can all be growing at a similar pace to each other. But I certainly think that it's a great model to, one, maximize your potential on every deal, 2, give investors peace of mind because you have additional control of every deal. You're responsible end to end. So if I go in and I invest with Tyler, I'm not just relying on Tyler and then his third-party management company and these other vendors that he's having in place, but I'm investing in his team to the core. So if that deal goes south, it's all on Tyler, right? But if it goes well, it's all on Tyler, right? So that's the beauty of the vertical model, is that it gives end-to-end responsibility for us as the operators, and there's not really the ability to just point the finger at the developer or the management company, right?
Exactly. Yeah.
So
it's accountability.
Yep, but it's a double-edged sword, but certainly something that generally works out in your favor as long as you're giving it the attention it needs. So I think that's great. What is one unpopular opinion that you hold?
I think that residential investing is dumb. That's probably the most controversial opinion that I hold. Like, I don't own my own home. I think that buying single family homes makes absolutely no sense, and that it's a waste of time. I think, for some people it's great. It's a great way to get into real estate investing. And I would of course suggest that over not investing in real estate at all. But I think it's not scalable. I mean, and also your returns are not that great. If you think about how much time you've got to invest into a single family home in order to make it work, there's no money to be made. I mean, again, I rent my own place because it does not make any sense for me to own my own home. Think about it this way. If I'm going to go out and I can rent an apartment complex that has a world-class pool, world-class gym. I can walk across the street to Publix. All my favorite bars and restaurants are nearby. In order for me to replace that level of lifestyle, I'm gonna have to buy in Nashville a $600,000 to $850,000 home, right? Depending on the size and where I'm gonna go, whatever. Well, if I'm gonna put that down, I'm gonna have to put down what, $150,000, $200,000 to buy that house. So tell me, like, if I'm going to invest $150,000 to $200,000, I'd rather go buy another piece of, a 50 key hotel, because that's how much it's going to cost me to do all of our due diligence on this hotel before we close on it. I'd rather go buy another one because that's going to make me a lot of money. And I can also have my team run that project. Whereas if I go buy a house and the roof leaks, now I've got to deal with that. All right. I have to come out of pocket for it. I have to pay for that. I have to deal with the scheduling. I have to deal with the maintenance of it. In an apartment complex, if anything goes wrong, hey, property management company, fix this. And then I leave for the day and it's done. And I don't have to worry about it. So that lifestyle is not for everybody. I get it. Maybe, but I would imagine anybody listening to this show, their home is not going to be their biggest investment, and it shouldn't be. And I think there's a lot of bigger real estate investors that share that same sentiment with me.
Yeah, completely. I think it's something that it oftentimes comes from experience, that you actually you feel those painful experiences of investing in. And that's not really, for me, it's not even just single family homes anymore. It's fourplexes, it's even 10 units. For me, I'm at a point
Small
where
projects,
I don't want to invest into anything that can't afford a full-time employee to manage it all of the time, right? Because even having a third-party company or even having our own management company, you have to have someone that pretty much is offsite that micromanages it. And every time there's an issue, they have to go and they have to fix it and figure it out. If someone needs to lease it, then they're going to have to go and figure it out, right? So it's just not a scalable model. Like you said, it might work for someone that really, maybe you're a control freak and you want to see things through. Maybe it's a learning experience in the first one. You want to touch and feel it. But when you start to really look at long term, if you want to be investing for decades to come, do you really want to have to give yourself this additional job for decades to come, or do you want to partner on something that's larger that you can afford full-time staff to operate? Because that's really how you're going to, I believe, be incentivized to do something long term. The sweat equity is another thing that doesn't appear on the spreadsheet that you're gonna come to find out the hard way.
Yeah, I'm not looking to buy myself another job. I'm just not.
Yep.
I've got plenty of those.
Yeah, exactly. Definitely agree, and I think it's a good message for everyone. I think even on turnkey properties, you still have a lot of hidden costs, right? You have to factor in for massive capex, what could be almost catastrophes on given a single family home, right? If you have roofs and HVACs, that can eat up an entire year of your cash flow in a single family unit. So I think there's just a lot of these risks that are oftentimes overlooked as you're looking at smaller projects. So of course, that is a controversial opinion though. And I'm sure there's many that are going to be listening to this that are going to say, no way, I've done great on these things. So to each their own. And that's just, something that every operator is going to have to think through for themselves.
Exactly.
We all learn from our mistakes as well as from the mistakes of others. One big goal of this show is to help listeners do the latter. What is one painful learning lesson that you've had that you can share with our listeners?
Get everything in writing. Always have it done in writing. If you can't afford an attorney to do that, then you can't afford to do the deal. Learned that the hard way with a handshake deal with a partner. And it did not go well. And so ever since then, I've always spent all the money on the front end with attorneys.
That is great. That's very similar to other advice we've received recently of, get it in writing and also double check the writing, right? Don't just breeze through it. You get contracts. I'm sure you get contracts in front of you on a daily basis, sometimes multiple times a day, but you still have to give them the attention they need and make sure you dot your I's, cross your T's as you have those legal docs in front of you.
That's exactly right.
What is one recent success you have that you'd like to share?
Ooh, let's see. I guess it was probably over the last 7 months, just how much we've grown as a company. I founded the development company back in October. And at the time, I had about $5 million in assets under management. And now we currently have about 30 million.
Wow.
So we're growing fast. I'm closing on another hotel tomorrow. We're working on another development on Dickerson Pike now. So it's been fun.
Wow. Congratulations. That's a lot of growth in a short period of time. And it sounds like you're managing it all well. So give us some best practices. What's a best practice for active operators that are seeking to get into their first deal or one of their early deals? And what are best practices for passive investors when it comes to investing passively into, we'll talk development deals or value add opportunities?
Yeah, as far as for a sponsor goes, best practices, look, why are you different? Figure out why you're different from everybody else. If you want to just go do the next self-storage deal, how is that going to be any different from any other sponsor that's doing a self-storage deal, right? You commoditize yourself and then you have to give better returns because that's the only sales point you have. So what's the story that you can tell? What's the positive impact you're going to have? How will this change people's lives or whatever that is? Figure that out. As an LP, best practice, interview the GPs. It's all about the team and the track record, right? That will tell you everything. The deal by deal doesn't really matter unless somebody wants to invest for a social or environmental reason, right? There's some sort of other community reason to invest. It comes down to the team. So interview the team, talk with some of their previous investors. Doesn't hurt to have those conversations.
Love it. Both great points. Where is the best place for listeners to find you online?
Yeah. So if you want to interact with me, Instagram is the best way at commercial in Nashville. There's underscores between the three words. So commercial _ Nashville. YouTube, we're putting out 3 videos minimum a week on YouTube, whether it's, interviews, commercial real estate news, or some sort of educational component. Been big on YouTube here recently. I respond to every message on Instagram. And then we also release the YouTube videos as a podcast. It's the Commercial Real Estate Investor Podcast. So check them out.
Love it. Well, I know you're producing a ton of good content and putting a lot out there for the commercial investing community. So definitely encourage everyone to plug in and follow Tyler's YouTube channel, connect with him on Instagram. So again, thank you for all you're doing for this community. Thanks for jumping on the show here today. It was a pleasure to have you.
Thanks for having me on, Dylan.
Thanks for tuning in and joining us on another episode of Operators and Allocators, hosted by the Equity Group, a vertically integrated private equity real estate company. You can find recordings of all shows along with other resources on our company website, therequitygroup.com, also listed in the show notes. A brief disclaimer to our listeners. Information presented herein is for discussion and illustrative purposes only and is not a recommendation or an offer or solicitation to buy or sell any securities. All investments are subject to risk and past performance is no guarantee of future results. The views and opinions expressed by the Equity Group speaker are their own as of the date of the recording. Any such views are subject to change at any time based upon market or other conditions. We hope to see you next week.